Good morning, dear students. We are doing chapter 4 business services, and today we are going to discuss about different types of insurance. Dear students, insurance basically classified into two categories, that is life insurance and general insurance. General insurance is further classified into marine, fire and other insurance. In this lesson basically we are going to discuss about life insurance, marine insurance and fire insurance. Life insurance. Since life itself is uncertain, all individuals try to assert themselves of a certain sum of money in the future to take care of the unforeseen events or happenings. So individuals in the course of their life are always exposed to some kind of risk. The risk may be of an event which is certain, that is death. In that case, what will happen to the other members of the family who are dependent on a particular individual income? The other risk may be living too long, in which an individual may become too old to earn, that is retirement. In this case also, the earnings will decline or end. Under such circumstances, individual seeks protection against these risks and life insurance companies offer protection against such risks. There are different types of policies which are introduced by life insurance companies. We are going to discuss a few of them which are very common. Number one is whole life policy. Now in whole life policy you have option to pay premium for a fixed period, for example 20 to 30 years, or you can pay whole life also. But in this, the amount of the policy will be given to your family after your death. Means you will not be getting the whatever amount of policy you are not going to get, your family will get after your death. Number two is endowment life insurance policy. In this you decide a date. For example, you think that when you will be turning 60 years, means your age you will be defining. So for example, you think that when you will be getting 60, so you will be paying premium that till that date, and for example you die before that, then the amount will go to your family. Otherwise after 60 years you will get that amount of policy. So in whole life your family will get. In endowment there is certain age, so after that age the money will come to you, but if you die before that, then the amount will go to your family. Number three, joint life policy, in which two or more people they take the policy. So usually this policy taken by the husband and wife jointly or by partners in a partnership form. Then we have annuity policy. This policy is basically for the people, those who want regular income after certain age. For example, I want that when I will be 60, I should get monthly some income. So what I will do is, I will give some amount in installments or lump sum amount to the insurance company, and after particular age which is decided and written in the policy, I will be getting monthly income. Then number 5 is children endowment policy, which people take for the children for their marriage or for their education. So other means it is like when you are dying, the amount will go to your family. If the term is over, then the amount will come to you. Next is fire insurance. Fire insurance is a contract whereby the insurer, in consideration of the premium paid, undertakes to make good any loss or damage caused by fire during a specified period up to the amount specified in the policy. Normally the fire insurance policy is for a period of 1 year, after which it is to be renewed from time to time. The premium may be paid either in lump sum or in installments. A claim for loss by fire must satisfy two conditions. First condition is there must be actual loss, means there should be actual loss which has happened. You cannot say that there is fire but actually there is no fire. And fire must be accidental and no intentional, means fire should not be intentionally created, it should be accidental. These are the main elements of fire insurance. Number one is, in fire insurance the insured must have insurable interest in the subject matter of the insurance. Without insurable interest, the contract of insurance is void. In case of fire insurance, unlike life insurance, insurable interest must be present both at the time of insurance and at the time of loss. Number 2, similar to the life insurance contract, the contract of fire insurance is a contract of utmost good faith. So you have to disclose each and every fact to each other, insurance company and the person who is insured. Number 3, the contract of fire insurance is a contract of strict indemnity. The loss which happens recover the actual amount of loss from the insurer. This is subject to maximum amount for which the subject matter is assured. Like I told you that, for example, you have taken a policy of 1 lakh and your loss is of rupees 2 lakh, then you can only claim 1 lakh. If your loss is of 50,000 and insurance policy of 1 lakh, then you can claim 50,000. The insurer is liable to compensate only when fire is the proximate cause of damage or loss. Means if the fire is the nearest cause of loss, then only you can claim from the insurance company. Marine insurance. A marine insurance is a contract or an agreement whereby the insurer undertakes to indemnify the insured in the manner and to the extent thereby agreed against marine losses. So marine insurance provide protection against loss by marine perils or perils of the sea. Marine perils are collision of ship with the rock or ship attack by the enemies, fire and captures by pirates, and action of the captains and crew of the ship. These perils cause damage, destruction or disappearance of the ship and cargo and non-payment of freight. So marine insurance, basically there are three things: ship or hull we call it, cargo and freight, and people get all these insurances for marine insurance. So we will be discussing that too. As I told you, there are three main elements of marine insurance, that is ship or hull, then cargo and freight. So these are the three types of insurance policies which are required for marine. Number one is ship or hull insurance. Since the ship is exposed to many dangers at sea, the insurance policy is for indemnify the insured for loss caused by damage to the ship. So this policy includes anything which happened to ship, you will be getting chance to take compensation. Number two is cargo insurance. The cargo means goods. So the goods which a ship is carrying, so the cargo while being transported by ship is subject to many risks. So these may be at port, that is risk of theft, loss of goods, or on voyage. Thus an insurance policy can be issued to cover against such risks to cargo. Means in ship or hull insurance everything is covered. Number two, cargo means only goods are insured. Then number three is freight. Freight means kiraya. See, when you are using ship, lot of freight, lot of rent you have paid to the shipping company. So for example, I have a shipping company. So if someone is sending goods through my company, I am not able to deliver the goods or goods are damaged in between, then the person will not pay me freight. So then the shipping company, they will get the freight insurance because they are in danger that they will get freight or not. So if the cargo does not reach the destination due to damage or loss in transit, the shipping company is not paid freight charges. So freight charges is the reimbursing the loss of freight to the shipping company. So that is, we get it insured. Dear students, this is your homework. You learn the difference between life, fire and marine insurance, then you write it in your notebook. Kindly don't email me your work. We will complete chapter 4, then I will ask for complete question answers of chapter 4 in email. Thank you.